Joining me now, J.P. Morgan Private Bank U.S. equity strategist Abby Yoder. Where to begin? So we got high oil prices at the moment, but I think it's interesting that J.P. Morgan once again raised its S&P 500 target to 8,000. And you've been between 7,800 and 8,200 anyway. So give me a sense of what's going to get us there, and if you're worried at all about this spending.
No, I think we actually got, look, like if you go back to July 30th, it was a very different set of sentiment, right? Like NASDAQ was in correction territory, the MAG 7 was the lag 7, and then you fast forward to today, and we're at near an all-time high. I think the major catalyst was that we heard from the hyperscalers, and what we heard from them is that you saw a clear revenue acceleration this quarter as it relates to their AIs. And that's very important, right? You have this massive spend that they continue to, increase. We needed to see some real return on that investment. We saw a 9 percentage point increase in their revenue, their AI-related revenue in the second quarter. Think about how big these companies are. That's really important.
The earnings are no doubt absolutely stellar. But the ROI, the return on investment, are you starting to see that trillions of spending in the aggregate are starting to pay off?
You are starting to see it, again, not only in the revenue acceleration, again, a 9 percentage point increase from 1Q to 2Q. The backlog for these companies, so this is basically revenue contracted for the next 2 years, $1.5 trillion. Think about that. That's revenue visibility essentially for the next 2 years, and it's up 150% year over year. So just not only are you getting that real-time increase, this 2Q increase in revenue was the first real sequential increase we've seen since 2023. So it's encouraging. We needed this for this to really work.
Well, we've got the hyperscalers moving higher today, but also the software names. What does that tell you? Because the software names have been touch and go depending on any day. And you look at today, Datadog, Intuit. So many of these names are doing very well. CRM.
I think the software trade is, and hyperscalers to a certain extent, are kind of the anti-semis trade, right? Like you're kind of seeing that as a pair trade in terms of, okay, I'm going to sell semis, I've made some profits, I'm going to put it in software and hyperscalers. The hyperscalers we feel more comfortable with from a fundamental perspective. Software, broadly speaking, and like thinking about traditional, like say SaaS companies, that's a little bit dicier, right? Like you're going to have to be much more selective in terms of what you're thinking about and what types of companies you get exposure to, because you do have these private AI labs that have essentially eclipsed some of the largest software companies in terms of their revenue run rate in just a few months, right? So we have to really think about that competition and be extremely selective.
And yet you do like the chips, you like the semis, you also like the banks. Which area of the banks?
So the large cap banks in particular, and I was making this point, June and July were very uncomfortable for investors, right? We had this incredible momentum sell-off. Obviously, the market was only down like 4% from its highs, but tech was down through July 29th. It was down, 14%. Banks were up 12%. That's really important, right? Your bond portfolio wasn't even protecting you over that time period, but you had banks up 9%.
Well, you look at the bonds and you look at the yields, and then we know that Wednesday we are getting July Consumer Price Index. That is an important consumer inflation number. And we get a sense of what the Federal Reserve might do next time around when they meet in September. And to my question here, this is the economic data this week. It's CPI. Thursday, you get the PPI, the wholesale version of inflation. Very important. July retail sales, an indicator of how the consumer is feeling, whether they are continuing to spend. For companies that are interest rate sensitive, but they don't mind higher interest rates, I'm thinking the insurers. For example, we've got the MetLife CEO coming up in a Fox Business exclusive in just a few minutes. He does not do a lot of interviews. Michel Khalaf is going to be here. They're okay with higher rates.
Right.
What do you think the Fed needs to do?
Well, so our view is that you do get one hike from them in September, mostly like on a credibility narrative, right? Because obviously the bond market reacted the way it did after the last Fed meeting, and it was not favorable, right? Like you don't want that type of price action with, the bear steepening that we saw. So we do think that they go one time, but one time only, right? And that's very important, because if it's one time only, and it depends on how they message this, right? Because they are kind of getting rid of this whole forward guidance, that is meaningful, because 25 basis points isn't going to derail everything that's happening from a capital markets perspective. It's not going to derail what's happening from a loan growth perspective. It's not going to pressure those smaller companies necessarily that have more floating rate debt exposure. But if they go one time and then signal that there might be more to come, that's problematic.
I see. And we don't know what Kevin Warsh is going to do.
And how they're going to message it, yes.
Very, very clear that he does not want to be too yammering about what's going on behind the scenes. Great to see you, Abby.